up, trades? I wanted to do a video analysis update on my favorite big money moves that I'm going to be trying to make before the quarter ends, transitioning into the fourth quarter. During this quad witching period, we're going to talk about Robinhood, Pltr, GameStop, Alibaba, Roblox, DraftKings, and Cvna. But more importantly, we're going to talk about how to become the casino, how to sell covered calls on these stocks, and how profitable it is to do this, to collect massive dividends. And we're going to talk about how to have the best of both worlds, which is blending the underlying stock with the Yield Max ETF. So we've got a lot to get into. Let's get into the first one, GameStop. I've noticed there's a little bit of Yield Max magic. They tend to release their funds at very interesting times in the stock's life cycle. You'll see what I mean by that as we go through this list. But if you pay attention, you can just kind of notice that with a few exceptions, YieldMax releases their ETFs at very opportune times for the underlying stock. Let's just say I've noticed that, and I've traded based on that with a few ETFs, Coinbase and Nvidia's covered call ETFs. So let's get into the first one, GameStop. They just released GMEY. So there's no dividend yet. I don't even know what group it's in. But the way that these covered call ETFs basically work is that, or covered calls in general basically work, is that selling volatile options is like selling car insurance to a teenager. Okay, it's a lot more risky, but you get much higher premiums. Now, there's some debate. There's not really a debate. We can show through the total returns that the covered call ETFs by themselves do better when the underlying stock does better. Why? Because the call premiums are going to increase in their covered call ETFs. They're not cash secured put ETFs, which I just recently made a video about. Go check that one out. So we're going to get into GameStop. Again, just an interesting time. And GameStop has very high implied volatility relative to the S&P 500. So we don't know the dividend yield yet, but GMEY is very likely going to have a very nice yield, probably at the very least above 50% once that dividend gets stabilized. So we're going to do Elliott wave of GameStop. It forms a 1, 2, 3. I'm going to try not to sniffle. I'm a little sick. 4. Wave 4 is going to be in black. Then it forms a wave 5 higher. These 5 waves form a 1, 2, 3, 4, 5 waves impulse for wave 1. And then there's an A, B, C correction from this high. That ends wave 2. Then the length of wave 1, placed at the wave 2 low, gives a wave 3 minimum target up towards 36, 37. From this low, it forms a small wave 1 and a small wave 2. And what it's done is it's entered wave 3 of wave 3. So what also happens is we have a clear 1, 2, 3, 4, 5 waves advance from this low. And I believe this takes the form of a leading diagonal. Let's see. Yes, that's a clean leading diagonal. Very nice. So here's what should be happening. GameStop should be going 1, 2, 3, 4, 5, wave 1, A, B, C, wave 2, 1, 2, 3, 4, 5, wave 1, wave 2, and then wave 3 of wave 3 has been confirmed. GameStop should be heading up towards 37 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, GameStop can head towards 50, 51, 52 before a shallow wave 4. For waves 1, 2, 3, 4, and 5, GameStop can head up towards 50. It's currently at 24. So I'm expecting those covered call premiums for GMEY to do very well. And remember, what can also be done, what I can also consider doing myself, is blending GMEY with GameStop underlying comments. I could also consider doing that for the best of both worlds, say 50-50 or 33% commons, 33% commons, 66% the Yield Max ETF. The next one, bang! Alibaba Baba did extremely well. Yes, it exploded out of a 1-2-1-2 Elliott wave nest. It was actually a triple nest, and this is exactly what I said was going to happen. I said this was wave 1, A, B, C, wave 2. This was wave 1, wave 2. This was wave 1 and wave 2. We were going to see wave 3 of wave 3 be entered, and that happened. And even on the small degree, there was a small wave 1 and a wave 2. So what we can do is we can take these extensions, measure the length of wave 1, place at the wave 2 low, and that's going to take Alibaba. I really like the 127.2% extension for wave 3. That's going to take Alibaba up towards the mid 180s before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, Alibaba can go 1, 2, 3, 4, 5, and it can look something like this. It can go up towards 220, 230. So what I'm looking for is that this was wave 1, A, B, C, wave 2, or A, B, C, wave 2, wave 1, wave 2, wave 1, wave 2, even on the small degree, wave 1 and wave 2. Alibaba is within wave 3 of wave 3 up towards the 180s before a shallow wave 4 and a wave 5 higher up towards 220, 230. So this ETF can be blended with BABO, which I own. So Alibaba can be blended with BABO. That's a 60% yield. Let's look at the total returns for BABO. If it's blindly averaged into since its inception, what happens? So to do that, I'm going to calculate the total return, and then I'm going to go to advanced, and I'm going to do periodic reinvestments monthly. And so what this does is it's going to invest $10,000 every month and just show what happens if BABO is blindly averaged into. It's a 59.2% total annualized return. We don't have the total annualized returns for GMEY. Let's go into Robinhood. Robinhood on this all-time time frame forms a big wave 1 and ends a wave 2 from the IPO. Then from this low, it forms a 1, 2, 3, 4, 5 waves impulse for wave 1, ends wave 2, and then explodes into wave 3 of wave 3. So it's exploded into wave 3 of wave 3. It had a shallow wave 4 correction, which I projected to end, and now it's within wave 5. The length of wave 1 placed at the wave 4 low gives a wave 5 minimum target, up into the 150s. So what I did to find the wave 5 target is I took the minimum wave 5 target, which would be found by taking the length of wave 1 and placing it at the wave 2 low. So what a more aggressive view would be is that from this low, Robinhood formed a small wave 1 and a small wave 2, or sorry, it's a large wave 2. It's in the middle. It's a small wave 2 on this bigger time frame, and it's a large wave 2 on this smaller time frame. So what can be happening, we'll go through the full count for Robinhood, is something like this. Robinhood can be going 1, 2, 1, 2, 1, 2, 3, 4, 5, wave 1, ABC wave 2, reached the wave 3 target, had a shallow wave 4. Now for wave 5, the length of wave 1 placed at the wave 4 low gives a wave 5 target of 151 for waves 1, 2, 3, 4, and 5, and that would complete a large wave 3 in red. There would be a shallow wave 4 correction and a wave 5 higher. So one ETF that there is that I invest in is HOOY. I'm looking to add to it. It has a 74.63% dividend yield, and the total return for HOOY when blindly averaged into, I'm going to go to the stock total return calculator. The total return for HOOY when blindly averaged into is 280%. Let's go into Pltr. Pltr I predicted perfectly. It formed a 1, 2, and then a 1, 2, 3, 4, 5, a wave 1, another wave 2. The length of wave 1 placed at the wave 2 low was reached for the wave 3 of wave 3 minimum target. I suspect what happened is it ended a wave 4 in black before a shallow wave 5 higher. So to find the wave 5 target, we're going to take the length of wave 1. We're going to take the length of wave 1 and we're going to place it at the wave 4 low. So the length of wave 1 placed at the wave 4 low looks something like this. 1, 2, 3, 4, 5. And let's look and see, would that even make a new all-time high? That wouldn't even make a new all-time high. So what could be happening is that Pltr, we'll get into the wave 5 target in a little bit. What I'm expecting, let's just get into the count. Let's just get into the count. What I expect is happening for Pltr is it formed a 1, 2 in blue, and that's why I'm going to make this 3 blue. So what could be happening for Pltr, what I expect based on my successful prediction, is that this was 1, 2, and this is 1, 2, 3, 4, 5, another wave 1 and wave 2, leading diagonal. It exploded into wave 3 of wave 3, had a wave 4 that retested the wave 1 high. Now wave 5 is at least going to take Pltr up towards 190. What could be happening is that wave 5 is actually the length of wave 3, and Pltr could go from the length of wave 3 placed at the wave 4 low all the way up towards 213 for wave 5 of a larger wave 3. So one ETF that I invest in is PLTY. It has a 50.1% dividend yield. When PLTY is blindly averaged into, the average total return is 145%. Past performance does not indicate future results. It's also worth mentioning that Palantir has been an extremely successful prediction. I've successfully predicted Palantir from the 20s and the 30s. You can see my work right here. You can see my work right here from the 20s and the 30s. Another leading diagonal. This was an expanded diagonal. 1, 2, 3, 4, 5. Expanded diagonal for wave 1. It exploded into wave 3 of wave 3. Had a shallow wave 4 and a wave 5 higher. ABC wave 2. And then you can see I predicted another wave 1. I mean, I was perfect. 1, 2, 3, 4, 5. Wave 1. 1 ABC wave 2. You can see that little box was an original target. So Palantir has been extremely successful for this page. So that's Palantir. We've done GameStop. We've done Robinhood. Let's get into Rblx. Rblx is another very successful one for this page. I predicted it from here that this was 1, 2, 3, 4, 5, wave 1, ABC wave 2. Sorry, A, B, C wave 2. And then it exploded. What I believe happened to Rblx is that it formed a wave 1 and a wave 2. And then it formed, this is like a textbook. This should be in an Elliott wave. This is very textbook. This should be in Elliott wave tutorials. This should literally be in Elliott wave's textbooks. But this is very clean. Wave 5 of a larger wave 3. We'll get into the full count. This is very pretty. So RBLY just paid its first dividend for Yield Max. That's looking very good. We'll get into the dividend yield in a little bit. Let's get into the full count. This has a very simple target. And this is like Elliott wave for beginners, but it's also Elliott wave for advanced. It shows how powerful it is to understand these larger degrees and how they're subdivided. So this is extremely clean. Very good one to get dividends from for this blow off top. So what Rblx did is it formed a wave 1 and a wave 2. Then it formed another wave 1 and a wave 2. And it exploded into wave 3 of wave 3 before a shallow wave 4 correction. What we can do is we can measure these retracements, and we can see this is going to be the inverse. We'll get the right retracements. This wave 4 ends at exactly the 38.2% retracement. Yes. So this ends at exactly the 38.2% retracement. Very pretty. 150.59 and then 50.10. So this is wave 1 and wave 2, another wave 1 and wave 2, wave 3 of wave 3, wave 4 ends at exactly the 38.2% retracement. So then the wave 5 of wave 3 target is found by taking the length of wave 1 and placing it at the wave 4 low. That would take Rblx to a new all-time high. That would take Rblx, just making sure I have it perfect. That would take Rblx up towards 156. What could also happen is that Rblx could go the length of wave 3, place at the wave 4 low for wave 5. That would take Rblx up to 213. So this new ETF is RBLY. It has a 50.54% dividend yield. There's no total returns because the ETF is so new. So we're going to get into, that was 1, 2, 3, 4, 5. We're going to get into some bonus. DraftKings. I mean, it's all about being the casino with the options instead of the gambler. And Yield Max allows me to do this without using margin and without selling options myself, without having to own 100 shares. And again, I could blend these with the underlying as I have done before, most successfully with Coinbase. So this is DraftKings. It has Dre. Another one that's interesting, Yield Max Magic. Interestingly, timed release. What it can be is 1, 2, 3, 4, 5, wave 1, A, B, C, wave 2. Then what DraftKings does that's very interesting is it goes and it breaks this wave 1 high, so it forms an incomplete bullish sequence. What most likely happened, this is 1, 2, 3, 4, 5, wave 1, A, B, C, wave 2, wave 1, wave 2. DraftKings is in an incomplete bullish sequence, and that's proven because it broke this wave 1 high. So what most likely happened is that this is another wave 1 and another wave 2. DraftKings is going to go break 53.61, and it's going to explode into wave 3 of wave 3, head up towards 68.34 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high, and DraftKings in wave 5 is the length of wave 1 placed at the wave 4 low, DraftKings can go all the way up towards 89. You want a price target for this wave 3 in red, the length of wave 1 placed at the wave 2 low. Again, I like the 127.2% extension for wave 3. That's going to be up there at 62. I'll make that in red, so it's the same degree. So yes, this is DraftKings. So, in my opinion, it's best to be the casino. Everyone wants to use Gematria for sports gambling. Everyone wants to use Gematria for sports gambling. What I show on my page is that Elliott Wave, being an options quant, and knowing Gematria. I mean, this is such a good video, I don't want it to get demonetized, but look at my post about Tesla. What I say? I don't even want to read it. Possible comms to buy Tesla. Isaac Tesla touchdown worm equals Elon Reeves Musk, CEO of Tesla. I like this video. I don't want it to get demonetized, but what happened to Tesla? What happened to Tesla? TSLP, speaking of Tesla, outperforms TSLY. TSLP outperforms TSLY. Blindly averaging into it, 33% annualized return for TSLP. So I think that's going to wrap it up. I'm probably going to invest in CVNY for Carvana. I already do invest in it. I've made some good money on it. CVNY and HOOY are my favorite. This is a beautiful wave 3 of wave 3. This was really pretty. I invested in CVNY. I invest in PLTY. So this video is about what I'm going to add to. Being the casino is great. Sell those options. Don't buy them. Always better to sell the options than to buy them. And now Yield Max allows me to do this through ETFs. The elephant in the room for CVNY is what's this from this low? Is it 1, 2, 3, 4, 5, wave 1, wave 2? The reason it could be is because the minimum target hasn't been reached. This is another incomplete bullish sequence. The minimum target for wave 3 is the length of wave 1 placed at the wave 2 low. There's a wave 3 minimum target of 438 before a shallow wave 4 and a wave 5 higher. So there's CVNY, 81% yield. I invest in this. I'm gonna buy more most likely. Got that minimum target. And then the total annualized return for CVNY, 87.67%. Just some closing thoughts is that if Y-SPY works out, I mean, some of these yields were only 50%. If Yield Boost works out, Y-SPY yields 50%, and that's the S&P 500, and it pays weekly. So if Yield Boost works out, Y-SPY yields 50%, it pays weekly. That's the entire S&P 500. In theory, it's less risky, but it is a leveraged ETF. But they do take defensive positions and buy puts. Slightly higher expense ratio for Y-SPY. I mean, Granite shares so far has been a force to reckon with. These yields on these leveraged ETFs are very compelling. They're most likely going to be more, it's hard to tell, are they more risky than Yield Max? Nvidia's is cooling down. COYY, do we have one for Koi yet? I invest in COYY and NVYY. So what I'm planning on doing is adding to, specifically, I really want to add to HOOY. That pays me huge dividends. I want to add to CVNY, and then I want to sprinkle these throughout. YETH is another interesting one that I think about. YETH got pretty hammered during the bear market, but now it pays weekly, and since Ethereum's recovered, 44% total annualized return. I believe it yields 70%. So some big money moves to be made by me before the quarter ends. These are my favorite Yield Max ETFs that I'm looking at. What I'm going to do, I'm going to take these weekly dividends from COYY, NVYY, other dividend ETFs that I have that pay monthly, and I'm going to invest them in these ETFs as I described.